Welcome back everyone, Philip here from BlackBull Markets, back again with another market update. We're looking at 3 pairs for you guys, so make sure to stick all the way through to the end of the video to see what we're looking at and potential setups for this week to come, and also maybe looking at a little bit of a preview of what could happen next week. Also, before we do dive into this video guys, make sure to smash that like button, subscribe to the channel, comment down below, let us know you've subscribed guys if you're interested in learning more about Forex and improving your current trading skills. So without further ado, let's dive onto the charts and see what this market has given us. Now, first of all, I want to start off with the NZD USD. I'm going to look a bit at the AUDJPY. Now remember, New Zealand dollar, so the Kiwi and the Aussie run fairly close together hand in hand, so we'll see some similar setups which could be fairly good. Okay, so first of all, daily time frame, NZD USD, we can see we've kind of broken back down below a bit of a resistance slash support zone. So you guys can see we had some big wicks reject right over there. So this is again the daily time frame, but zoomed in, and we can see we broke past it, and now we actually retested that zone. So this for me is what I like to call a zone re-entry. Okay, now there are a lot of people who like to trade head and shoulders a certain way. For me personally, I don't really care too much about the neckline. So if you guys know what a normal head and shoulders looks like, this is kind of the structure that we generally see. We've got our shoulder, our left shoulder, our head, we have our neckline down below here, and we've got our right shoulder, and the market then proceeds to move down. A lot of people like to trade the neckline entries over here, and then what they do is they measure this section and see how far this market could potentially drop. Now for me, I found this entry is a little bit outdated, doesn't really work that well, especially in Forex. Especially keep in mind guys, the people who invented or traded these sort of structures, they still work, don't get me wrong, but we have to adapt and improvise a little bit as well. So when these structures played out very nicely, it was way back in the day when the market had a very niche, certain type of people trading it. They already were money smart and were a little bit more comfortable with trading the market. Nowadays, we have anyone with essentially, let's say, a small amount in their pocket can call themselves a trader, and there is a lot of volume in Forex. So we have to improvise a little bit. So personally, I don't really, there's a reason why I don't call them head and shoulders. I look for zone re-entry. So essentially, what we have is we have the market coming to a resistance, pushing back down, breaking out of the resistance. Now, I don't really care about this neckline zone too much. All I care for is a rejection back again on that side. So if the market breaks back down, regardless of where this neckline is going to, if I can get a rejection on that zone, I'll be happy to look to take positions to the downside, because we have re-entered this area and the market's likely to push back down again to even reach that neckline zone, or even pushing a little bit further than that, depending on where our support or resistance zones are in the market. Okay, so let's have a look. Knowing that and saying that, we can see a very similar, we see that structure sort of play out here very nicely. Get this out the way. We see the market push up to that shoulders line. We see it push back down, ignoring the wick because I'm using this very common, this is a more common area where the market will we're seeing a reject. We saw candle open and closes over here. We saw it playing out a support over here, support again. Now obviously with that resistance is helping along the way as well. So market's broken past it, came back down, and now we're seeing this slight little rejection on there, and this could be a good place to look for potential moves to the downside. Now I'm not going to go straight ahead and say, yep, this is it. This is, 100% certain the market's going to go back down. Even if I get a confirmation, we can never be 100% certain. That's why we always have to look at two sides of the story. Okay, we could even look at putting in a bit of a trend line over here, seeing if the market will reject on that, keeping that in mind as well, being aware of things like that. But for now, the sell is looking fairly good. We're seeing the market struggle to the upside, and we see how quickly this drop did happen after this rejection, when we saw the buyers panic and the sellers kick in. Okay, so what I'm personally going to be looking for before I do look at any entries in this market, I want to see this candle close down, something along the lines like that. Okay, so that's the kind of candle that I want to see coming up next. Obviously body and the wick. That's kind of the candle I want to see, which then will help me understand that it kind of will confirm that the market said, okay, yes, I have broken below the support as well. The sellers have taken over. There's a lot of confidence to the downside in the market, and now we can start looking at positions. We have a bit of, keep in mind when we trade into resistance, we have always, or trading into market structure again, we always have internal support / resistance areas that we need to look for. First one I'm seeing coming up, 0.67275. Next one's 0.66675. And obviously along the line as we keep going down, 0.6 0.65780 is another one, and then we obviously have this low where we saw back in Feb, roughly about in the 0.65180 mark zone. Okay, so that's kind of what I want to see. It's sitting up very nicely, so we'll see how this does play out. Hopefully it plays out. Again, we always need to look at both sides of the picture as traders. You know, I always say this in my videos, and I say this and I constantly repeat this because it is crucial for people to understand. We're not here to predict the future, guys. All we have to do as traders is react on what the market gives us. Okay, because if I am set on sells here, right, if I have my blinders on and I'm completely set on sells, if this market happens to break above here, stop me out, you know, or you know, I could say, no, you know, I've done my analysis, the market needs to go down, it should go down. I will continue to hold a sell as I continue to push into drawdown, you know, continue as the market climbs higher. And then on hindsight, once I've said, okay, this is enough, I'm going to close this, I can't take this anymore. And then I look and said, you know, hold up, I should have taken a buy on this trade a long time ago. Okay, this is one big psychology thing that people struggle with a lot, is letting go of trades that they're wrong in. Okay, we're not here to be right or wrong as traders. All we need to do as a trader is follow what the market gives us. The market doesn't care whether you're right or wrong, but it also doesn't care if you want to, if you are going to take money out of the market. Okay, so just follow what it gives us. It is literally telling us what to do. We just need to pay attention and use a stop loss if we are wrong. Okay, that's why stop losses are so extremely crucial. And also take profits, guys. Take profits are just as crucial as stop losses. I've seen countless people trade with stop losses and no take profits, and then what the market does, they have no set take profit. The market runs, and then it reverses and comes back up again and takes them out of that trade. And they literally gave back this entire amount of profit. I've seen this happen over and over again. So before you enter a trade, know where your stop loss will be, know where your take profit will be, and then you can go on to the next steps about calculating your risk, how big your lot size needs to be, and other things along the lines of that, whether you're going to rescale in or whatever. Okay, that's very crucial. All right, let's move on to the next pairs. Okay, so other pair I want to look at, Aussie JPY. Okay, we're seeing a very similar structure play out here, a nice beautiful zone re-entry. This is the hourly term time frame on AUDJPY. We can see here again, right over here, there's a nice little resistance that the market has come to reject. We saw it just touch it. I can maybe pull this a little bit tighter, a little bit further down to this opens and closes the candles, and we see it right now. Now again, I'm not going to just take a trade because it's rejecting. I want to see some confirmation. So I'm going to look for a very similar sort of structure in the market where I want to see this current candle close at least below here, and then we can start saying, okay, cool, you know, market's convinced or convicted that it wants to start moving to the downside. You know, we can maybe start looking at taking positions down. Targets, we have a bit of a, obviously again, some structure we're playing into. So first target I'll be looking at roughly about the 92.8 mark zone, 92.9 mark zone would be a good place to look at. Okay, and then obviously if we break further below that, you know, we've got 92.6 to look at, which is some good targets. But again, guys, other side of the story, if we look here on the charts, we can also see that the market is sitting on a support. So be aware of this, guys. Be aware of this. Now, obviously, I'm not going to take it. I'm not going to take a trade to the upside. Reason being, I'll explain this to you quickly. So my bigger level, my resistance level at this stage is the biggest level because this is present on the daily, sorry, on the hourly, and the 4 hourly. Okay, so we can see that that is present there. It's on the bigger term time frames. We can also see the same resistance, which is right over there. We see the same resistance playing out right there on the daily time frame where these candle opens and closes. Okay, so that's the strongest zone at this stage. Okay, so that's why I'm a bit more convicted with the market going to the downside now. So I'm not just going to take a trade to the upside or to the downside and hope for the best which one plays out better. What I'm going to wait for this market before I decide to take a trade to the upside, I'm going to wait for this market to break out, reject on here, and then I'll start looking for positions further higher. Okay, now targets to the upside, looking at the 4 hourly term time frame, we obviously have some major consolidation to go, and that's again why I've got a little bit of a bias coming to the downside because of this giant consolidation zone we see right over here. Okay, we see it play out. So you guys get my idea, my drift. Okay, we see this wick right over there has touched into that zone. Okay, this is again why I've got a bit of a bias for the market to push to the downside. We can see beautiful consolidation zones coming up here to the low side, which is that down, you know, downside target. So the upside we are running again, like I said, into a bit of bit of traffic, a bit of a strong zone. Okay, there is still fair potential for the market to go up. We're looking at the weekly time frame. We're fairly clear to the left. We are, again, another thing that's making me feel like this market might want to come back down is looking at these previous weekly wicks. We saw the market give us a lot of energy to the upside initially, and now we're seeing fear and panic running away as these wicks get stronger and stronger, and the momentum in the market is slowing down. Okay, so this next candle could potentially close back down here, and then obviously we can start to see the market pushing back to the downside. Okay, so another update I want to look at here for you guys is gold. Now gold, we spoke about this one in the previous video, so go check it out if you guys want to see what we were looking at. We're looking at this tighter squeeze, the smaller consolidation zone here on that 4-hourly term time frame. I had our top zone drawn out here for the purpose because the market was sitting at it, potential rejections. We eventually broke out of it, so we got some nice clean moves. Looking here at the hourly term time frame, we can see this is that rejection we were looking at when the market was playing around here. We then had that strong breakout, so we didn't really get it. Now here is a bit of a head and shoulder structure. It's not very clean. I'll drop it down to the 30-minute time frame so we can see it a bit better. So drop it down to the 30-minute so we can see it slightly bit better. Okay, we have our candles bases right over here, but if you guys can see it, okay, there's our head and shoulders or zone re-entry. Okay, so this was our initial look to enter into the market, even with this wick over here. If you missed it, this is a beautiful entry right over there. Those 3 wicks, we can see that nice little triangle structure over there that the wicks have created. We've got a nice beautiful green candle close. So there's an entry as well, if you guys had missed this previous one. And obviously our targets could have been at this tip of the wick where the market completely just blasted past it and reached it. Okay, now we're sitting at this overall, a major 4-hourly slash daily, sorry, hourly slash 4-hourly, even daily as well, daily resistance. Okay, but that's currently where we are sitting at. If I can get this line drawn straight, you guys can see there, that's exactly where we're sitting at right now. So now for me, when we stay in consolidation zones in any market, the longer the market stays in that consolidation zone, the messier it gets inside of the zone. So for me, starting now, this is starting to become a no trade zone. So I'm not going to be looking for any positions, but I wanted to show you guys that nice beautiful play that we had. We discussed it on our previous video for gold, and that it happened to play out very nicely. Again, we looked at both sides of the picture, what could happen if the gold breaks the resistance and what happens if gold rejects the resistance. So this is why that's why it's so crucial for us to always look at 2 sides of the picture. Okay, but for me right now, we can see lots of traffic. So for me, I'm not really looking at taking any trades inside the zone for gold. If I'm going to start getting interested back into this this commodity again, is either when gold breaks above this 1972 mark zone and then start to push for all-time highs, which will be great. Again, those will be my targets. So all-time highs sitting in our charts just above the 2074.08 mark zone, just above it. We can see it playing. So if we have a look here, okay, very, very nice targets. Now to the downside, I'm not going to be looking for anything for a while because I want gold to go below 1896 or 1895-ish, around that zone is where I want to see gold go below, and then I'll start looking at potential targets to re-enter. Obviously on the lower term time frames we can, I mean, if you really want to look at lower term time frames, so for you day traders and swing traders, sorry, for you shorter term traders, okay, there are some beautiful setups coming up. Gold has now wonderfully rejected that zone, so there could be potential sells, okay, but I'm sure by the time this video has been posted it might be a little bit too late for entry, so we'll look at potential future targets or future entries for this gold. Okay, so if you don't happen to be on this trade right now, we could look at potential entries back as it rejects, or personally, if I was to trade this on a short term time frame, I'll wait for a break of this 1950 mark zone and then let the gold reject it and push for the lower. That could be a beautiful entry. You guys can see nice support slash resistance zones. We have some nice targets coming up, 1940, 1939. Okay, some good zones we can see it have played up previously as the consolidation area. Nice support over here, support again on the 11th of April. And then obviously below that we're going to have to start looking at other support trace resistance areas. Okay, so very nice little pair, very nice little analysis for you guys. Hope you did enjoy it. Like I always say, guys, if you want to see us analyze any other pairs, or if there's anything, any structure that we might have missed on the markets, definitely let us know down below in the comments. We'll always be happy to respond to those and see charts that you guys want us to analyze. All right. From us here at BlackBull Markets, thanks so much for watching. As always, stay tuned, enjoy the week of trading, and trade safe.